Hey guys, good evening. In this video, I'm going to give you a quick recap of some key highlights from Fingermotion's 10K. Fingermotion is, for me, what I categorize as a high volatility momentum trading stock. And I got first interested in it back in 2022 when it ran from 62 cents to $9.80. So I have been following this stock for 3 years. I started trading it in 2023. And you can see that my most recent swing trade entry on Fingermotion was in December of 2024 with a buy at $1.30. And then I got the opportunity a couple days later to pick it up even cheaper, adding to my position at $1.08. While I did re-enter a momentum trade in Fingermotion when it hit its low around $1 to $1.30, I have already exited that position. You can see that over the last couple weeks, Fingermotion has really been on fire. Great for momentum traders. It topped out at $5.20, currently trading at $2.96. And in this video, I want to go over with you guys some key reasons why the stock remains under pressure from shorts and why it had this massive red candle today. I do not make dedicated videos about Fingermotion often, in fact, almost never, because it's just a momentum trade, and sometimes the delays where we have to wait for a good entry might be many, many months. But it remains a high volatility trade where if you are patient and get a good low entry, there is a reasonable opportunity for speculative traders to see outsized gains. The key is you must wait for a good entry. And we're going to talk about today some of the things that are going on with Finger and their financials that give us a heads up about where the stock price might be headed over the longer term, say the rest of this year. I will get into some very interesting tidbits from today's 10K, but before we do that, let's talk about the financial statements contained here in this 10K and just very high level look at some of the numbers. The revenue for Q4, the most recent quarter, came in just over $10 million, and it's been basically flat for at least the last 8 quarters if we look back here to the right, with an average revenue per quarter of around $8 million. If we drop down to net income, the main issue that Fingermotion has is they are what I call pre-profit. They've never made a profit. This is a company that has a history of only generating losses, which if you're wondering why there might be shorts in Fingermotion, this is one of the things that you can write on your list about why a short might be interested in Fingermotion. The company is not profitable. They constantly have to go to the till, the secondary market, to do equity raises, i.e. dilution, to keep their business in operation, because they're not profitable. We can look at the shares outstanding over the last 4 years and see that the company has a long history of increasing the share count to raise money to fund the growth of the company. A necessary evil, but as a trader, if you want to trade this thing profitably, paying attention to stuff like this is pretty important. The net result of this income statement is the company has very poor profit margins, a negative 9.5% operating margin, a negative 1% profit margin, a negative 35% free cash flow margin. Again, this is bait that will attract shorts and keep them interested in shorting Fingermotion, because the outlook at the moment anyways, until the company turns things around, is still a little bit grim. On the balance sheet, the company has $1.13 million of cash as of the 10Q date. However, they did announce an additional dilution today that raised another $2.5 million. So effectively, their current cash position sits around $3.6 million. When we look at working capital, which is current assets minus current liabilities, and shareholders' equity, which is the total assets minus the total liabilities, the balance sheet is actually in pretty good shape for Fingermotion. We have a positive working capital and we have a positive shareholders' equity. I will point out one thing that really stands out to me though on this balance sheet, and that is the disturbing trend of a growing accounts receivable even though revenues are remaining flat. We saw just a second ago on the income side that revenues have averaged around $8 million per quarter. The disturbing thing that I see here is that since Q3 2024, accounts receivable has grown by about 400%, from $6 million to $32 million. If you're not a CPA or a finance guru, go get one on your side, because this trend in DSO increasing like this is very problematic to anybody who has been schooled in finance or accounting. It is a sign that in terms of collecting cash, the company is not operating efficiently at all. In fact, it is operating terribly on turning accounts receivable income that they're saying that they're receiving. They're not able to convert it into cash to put on the balance sheet, which is why they have to keep diluting. I want you to do your own work and check out why a growing DSO, a growing accounts receivable under a flat revenue, is a disturbing trend. This is definitely something that I'm going to be keeping my eye on. They need to convert these accounts receivable into cash. The CFO needs to do his job. This is evidence of a job not being done, and another reason why shorts would be attracted to this trade, including the dilution that was announced today when the company released the 10K. As I just said, their cash position is around $3.6 million. When we flip over to the cash flow statement, one thing that jumps out at you right away is that in the last quarter, the operating cash flow was negative $3.6 million. $3.6 million of cash burn from operating the company. If that trend continues, stick with me here. If they're burning $3.6 million per quarter, and they have $3.6 million in cash right now, how much cash do you think they're going to have in 90 days when the next quarter is complete? Now, I don't know. Maybe they drop back down to $1.5 million of cash burn. However, this is something that you should be thinking about as an investor. What is the next quarter's cash burn going to look like? Cash used in operating activities. How much of their current cash are they going to use up? And what is the probability of yet another dilution coming from Fingermotion? One final thing on the cash flow statement, if you are trying to assess any risk of future dilution from any company that you're swing trading or investing in, is to look at the free cash flow. And for Fingermotion in the most recent quarter, it was negative $3.5 million. And they have only a history of negative free cash flow, which means that they are continually having to come to the secondary market to raise money through dilution. You guys have heard me over the last 2 or 3 years talk about the risk of dilution with Fingermotion, and I don't see any reason to believe that that risk is going away anytime soon. Let's see what the company itself had to say in its 10K released this morning. The first item of interest from the 10K that I want to cover with you guys that no one else is going to talk about is the auditor's report, the auditor's statement of the 10K. And they do disclose a going concern risk, substantial doubt about the company's ability to continue as a going concern. It says that the company has suffered recurring losses from operations that raise substantial doubt about its ability to continue as a going concern. And I don't bring this up to neg on Fingermotion. I bring it up in any company that we're covering that has a going concern risk disclosure, because when a company tells you that, you should be thinking there's high risk here of dilution or worse. Some companies that have going concern warnings end up in bankruptcy court. I don't personally think that that is a problem with Fingermotion. They seem to have no problem raising money as they need to. But as the auditors pointed out, and as Fingermotion tells us themselves in note 3 on page F14, the company will need to secure additional funds through various means, including equity and debt financing or any similar financing. There can be no assurance that the company will be able to obtain additional equity or debt financing if and when needed on terms acceptable to the company or at all. However, the key point really is the last sentence here. Any additional equity or debt financing may involve substantial dilution. Another thing I want to continually remind you guys to be in the habit of doing on any company that you're reviewing a 10Q or a 10K, besides looking at the management notes, the auditor notes, checking for a going concern warning, look for the subsequent events note. And we do have in this subsequent event, note 17 from Fingermotion, that the company issued 940,000 shares of its common stock on May 28th at a price of $2.50 per share to 8 individuals under a private placement. That private placement at $2.50 is essentially the company telling you what these shares are worth, and is why the stock price plummeted, gapped down today from yesterday's high of $3.90 to a low today of $2.50. You notice how it hit that floor right at where the company valued its shares. Hopefully over the next couple weeks, $2.50 will serve as a floor for Finger's stock, although that remains to be seen, and we'll all find out together in the coming weeks what the price action of this stock does. Sometimes they overcorrect below the price set in a share offering. So could it go below $2.50? It could. Besides that $2.50 level from the private placement, we do have a demand zone down here all the way around $1 to $1.30. I don't know if it'll get that low. I'd love to buy it in the low $1 range again if it ever were to get back down there. And I think the answer to that question, could it go that low again, depends over the next quarter or two what the company's cash needs are, and if they need to do more dilution to keep enough liquidity on the balance sheet, or will they be able to convert some of those accounts receivable into actual cash coming into the company. That's one way that they could be saved and not have to do more dilution. People that are really in love with Fingermotion ask me, Tony, why don't you talk about the press releases, all the good news from Finger? Because it's just good news, fluff, press releases. There's no revenue I can tie to these press releases yet. Therefore, they are puff pieces used by Fingermotion and the promoters of the stock on social media to keep investors interested in the play. But at the moment, for me, there's nothing really exciting to talk about here other than speculation. One day, these might turn into revenue streams. I don't care about one day. I'm trying to get a good entry for a swing trade. And until these puff PR pieces turn into actual revenue, they are meaningless to a momentum swing trader like myself. My final caution to you guys, because I want to see you have profitable trades, is to pay attention to who you're listening to. It's fun to get excited about a stock. It's fun to have a community regarding a stock, and Fingermotion has its own community, but some of the people, some of the loudest voices in this community have very unreasonable expectations about price targets for Fingermotion. Where I came back on the social media scene a few weeks ago as it was pushing through $3 saying, guys, you know, it's starting to get to that point where we should start thinking about taking profits because there's probably going to be another dilution. You know, I get beat up because the loudmouth promoters don't want you guys listening to someone like me that's urging you to lock in gains. If you got in at $1, what a fantastic gain opportunity there to sell at $3, $4, $5. Beautiful. Well done if you were one of the ones that did that, because we did get the very dilution that I was warning about over the last several weeks. And you see what happens to the price. It drops all the way down to $2.50 in just a couple minutes. It remains to be seen over the next couple days and weeks how these stock trade. So I'm not making any firm predictions. I'm going to be watching it right along with you guys. But if I had to guess, it would not surprise me to see the price meander down to $2.50 unless there is more news out of the company that generates interest in the stock. These same promoters putting out ridiculous price targets, $500, $1,000 for Fingermotion, which was just a dollar a few months ago. They seem a little bit ridiculous to someone like me. I'm happy to make a 2, 3, 4, 500% gain on a trade and get out, and then be patient, wait for it to come back down, wait for the next dilution, get my cheap entry, rinse and repeat. It is speculative. As long as the company is losing money, this is a speculative ticker. But for those of you that are bold and intelligent, you can use timing and patience in your favor to profitably trade this stock. You got to get out of the mindset of listening to these people pushing ridiculous price targets. The same people that lie to you and tell you that Alibaba is going to buy Fingermotion at $7 to $10 when the company itself is selling shares today at $2.50. Just bold-faced lies, and they call it rumors so that they have a little bit of wiggle room when the SEC comes running their way. These same promoters will also give you analyst reports from an analyst that no one has heard of, and that they cannot give you the source of the actual analyst report because it doesn't exist. Analyst reports with price targets of $22. Analyst reports that do not exist, my friends. And when I very nicely asked the gentleman promoting this analyst report if I could have his source data so I could read it myself, he blocked me. What does that tell you about the promoters of this stock? Who is being honest with you regarding what is going on with this stock? That is up for you guys to decide. Your power is you get to pick who you listen to filter through the noise. My recommendation is always going to be to get your information directly from the company 10K, the management notes in a 10K, and careful analysis of the financial statements. If you are swing trading Finger, then you already know the basic rules. We don't buy into run-ups. We buy at the bottom of dips and we sell into run-ups. What kind of swing trader are you? Do you have the habit of buying into run-ups and then getting stuck and just holding the thing in the red for months and months and months or years? Or are you being patient and intelligent, buying when it's cheap and selling when you have reasonable profits? I'm hoping that you're in the second category. And if you're not there yet, stay tuned to the channel. Add my voice to one of many that you listen to on Fingermotion. I don't hate the company. I've been following it, like I said, since 2022, profitably swing trading it since 2023. And I wish them all the best. Right now, I'm in a waiting period to see what happens with the stock price over the next couple weeks. And if I decide to buy back in, if you follow me on X, just like I did in December, I will disclose my buy-in after I do it. In the next couple weeks or months, if that opportunity presents itself on the chart. For me, it's still going to be what I categorize as a speculative trade because the company is losing money, and I do expect that there will be further dilution from Fingermotion. We just saw in several disclosures from the company itself in the 10K that they will need to raise additional equity or debt to fund liquidity in the business. Play it smart. Read the filings, understand the financials, ask yourself why the promoters will never talk about the financials in the detail that I just gave you in the past 5 minutes. Thank you for watching all the way through. I hope you learned something. If you have questions or comments, feel free to drop them down below. I always love getting comments or questions from you guys. Just make sure you can communicate like an adult so you don't get blocked from the channel. I am Tony Denaro. Have a good evening, and I will see you on the next video.